Hey everybody, it's Bobby Nahum here with AMAC Real Estate Company. Hope everybody is having a fantastic week and hope everybody has had a fantastic year so far. Today we're going to be talking about the real estate market here in Leon County and what we saw in the second quarter of this year. But before I get into that, if you guys like the content that I share, please go ahead and subscribe to my YouTube channel, Bobby Nahum Real Estate, and also give it a like if you wouldn't mind. So anyway, just to get into it, we're going to be talking about a few things today. First thing I want to do is kind of give you guys a ground level report from what I'm seeing in the market, just in my day to day business with buyers and sellers. And then we're going to be also going over 6 real estate metrics from the second quarter here in Leon County that we saw. And we're going to compare those metrics to the second quarter of 2020 just to see how our real estate market compared this year to last year, to give us an idea of which direction the real estate market is going. So those metrics that we're going to look at, we're going to be looking at the number of properties listed for sale, the number of homes that sold, the average sale price of properties in Leon County, the number of days that it took a home to sell on average, the sale price to listing price ratio, and then we're going to also talk about distress sales and what I call actually the distress sale to total sale ratio, which basically measures what percentage of overall sales distress sales make. But yeah, with regards to what I'm seeing just in my every day-to-day work, I mean, it's kind of what we've been seeing. You know, low inventory. We still have a major shortage of inventory. And actually, this year we have higher demand from home buyers. More people are buying homes this year even than last year. And at the same time, the inventory of homes is actually lower this year than it was last year. And we're seeing that in the everyday market in the form of multiple offers. I'd say it's more common than not to have multiple offers on properties. Out of all the listings I've sold this year, I think I've had one listing actually that didn't have multiple offers on it. The rest all did have multiple offers. You know, I think uh, one of my listings I had as many as, I want to say, 12 offers. I've had one with 9, one with 7 offers. So it's a pretty crazy market out there. So it's, you know, if you're buying a house, just be prepared for that. And if you're selling a house, you also need to be prepared for it too, because you need to know how to handle the multiple offer situations. So listings are selling quick this year. With a caveat, I'd say if the listings that are in good shape, that are move-in ready, and where the sellers have taken the time to put the time and money in to get them to looking nice, those homes are selling for top dollar and they're selling quickly. And like I said, in many instances, I'd say more instances than not, we're seeing homes sell for above the asking price. And the other thing that we're starting to see, which is becoming fairly common too, is buyers are, because they're competing with other buyers, you know, they're trying to get their offer accepted and trying to figure out ways to make their offers more appealing. One of the things we're seeing buyers do is waive contingencies. I've seen buyers waive appraisal contingencies. I've seen buyers waive inspection contingencies. I've seen buyers waive financing contingencies. All kinds of contingencies that buyers normally never waive. They're having to waive those to try to make their offer more appealing to the sellers. So that's kind of what I'm seeing in just my day-to-day work in the market. So let's talk a little bit though about the real estate metrics. So the first one that I want to talk about is the number of properties listed for sale. So compared to last year, listings actually were down 4% compared to the second quarter of 2020. So there were 2,791 homes listed for sale in the second quarter of this year. And again, that's down 4%. So the second metric that we are going to look at is number of homes that sold. So homes in the second quarter, home sales in the second quarter went up by 27% compared to the second quarter of 2020. So you got a 4% drop in inventory. At the same time, you have a 27% increase in sales. So small drop in the supply, huge increase in the demand. So as you can expect, with the decrease in supply, increase in demand, prices also went up. So the average sale price of homes in Leon County actually went up by 9%. So that's a pretty big jump. So just to kind of give you some context, historically homes appreciate on average 3 to 5% a year. So at 9%, that's well above the average. So that's a pretty strong increase. The next one is average days on the market. So average days on the market actually decreased by 23%. So in the second quarter of this year, on average, it took a home 43 days to sell in Leon County compared to last year when it was 56 days. So it's a pretty significant drop, 13 days. And then the last metric is the distressed sale to total sale ratio, which was down by just a little bit under 0.5%. It was down by 0.46% from last year. So distressed sales made up 1.35% of total sales, which is very small. It's down from last year from when it was 1.81% of total sales in the second quarter. So again, distressed sales, for those of you who don't know, are usually foreclosures or short sales, but they can also be other types of scenarios, such as like a bankruptcy sale or an estate sale. It's really any kind of sale where the circumstances of the sale cause the property to sell for less than it normally would in an arm's length transaction. So normally distressed sales sell at a discount compared to non-distressed sales, and they tend to bring down values of surrounding properties. But with the distressed sales making up such a low percentage of overall sales, they're not really having an effect on today's market. So, but one of the I'd say the metric though that grabbed my attention the most is the sale price to listing price ratio. So that was up 1.25% from a year ago, but it was 100.06%, meaning that homes on average in the second quarter of this year sold for over the asking price, for 100.06% of the asking price, which I've been doing these market reports for over 10 years, and I can tell you in the last 10 years I've been doing these market reports, I've never seen a quarter where homes on average sold for more than the asking price. It's actually pretty amazing. Last year, just to give you a comparison, homes in the second quarter of 2020 sold for 98.81% of the asking price overall. So it was high last year, but now it's over the asking price on average is what homes are selling for. So it's pretty amazing. I don't know if how long this market will stay like this. We'll just have to see, But going forward, one thing I could expect that we could see for the foreseeable future is the shortage of inventory. And we've had a shortage of inventory for quite a while. The main source of the shortage of inventory is we've had over a decade following the Great Recession is really when it started, probably 2009, 2010, of lackluster home building, meaning home building that was way behind what the rate that homes were built historically on average. So in the past couple years, the home building has started to pick up some, but recently, because of the shortage of supplies, the rapid increase in price of supplies, building materials, the shortage of construction labor, and shortage of vacant land to build homes on, all that has caused home building in the last month or two to start to slow down pretty significantly. So why is that significant? The reason that is significant is because we need to be building homes at a very much higher pace than we are in order to keep up with the demand. I think we were around 650, roughly speaking, it's not exact numbers, but it's between 600 to 700,000 new homes is the pace we're building homes at, the annual pace we're building homes at in the second quarter and recently. So we need to really be building over 1 million homes a year to keep up with the demand. So we're not even close to that. So anyway, the reason that's important is because I think we can expect the low inventory, low supply seller's market to continue for the foreseeable future. I don't see that. I do not see that changing at all. So the other thing that we need to pay attention to is inflation. So inflation has been very high over the past couple months. The previous 10 years or so, inflation has been pretty much non-existent. We've been at like sub 1% inflation for the past decade or so, and all of a sudden we're seeing inflation go up by that much or more in 1 month. So how does that relate to the housing market? So the reason that relates to the housing market is because if the inflation continues to persist, one of the tools that the Federal Reserve has to combat inflation is by raising interest rates. So when you raise interest rates, it makes borrowing money more expensive. Less people borrow money, so you're essentially taking money out of circulation in the economy if you raise interest rates. So if they raise interest rates, it's going to cause mortgage rates to increase, and if they increase the mortgage rates, less people will borrow money to buy homes, which means fewer home sales. So that could happen. I think how high they raise interest rates will be really the thing to look out for. If it's just a small increase in interest rates, it's not really going to affect the economy that much in the housing market, because right now we're at historically low interest rates. I think the average rate for a 30-year fixed rate mortgage is around 3% right now, which is extremely low. So if it got pushed up even as high as 4%, I think that we'd be okay. But if for whatever reason it got pushed up to 4.5%, 5%, or higher, I think that could start to have an impact on our real estate market, and we could see a slowdown in home sales. So keep an eye on inflation, keep an eye on mortgage interest rates. Now, if you are selling a home in this market, the advice I have for you is make sure you get your home ready to sell. I mean, it's going to pay off in this market. It'll definitely pay off. There's a big discrepancy between homes that are move-in ready and nice and look good and the pictures are good versus homes that, bad pictures, don't look good, doesn't show well. The homes that look good and they're move-in ready and they have nice pictures, those homes are going to sell for a big premium and they're going to sell quickly. So if you're an owner thinking about selling, if your home needs a little bit of work, take the time, the money to get the house ready. It'll pay off. If you're buying a home, I would say be prepared. Have your pre-qualification letter ready. That way, if you find a house, you have your pre-qualification letter or proof of funds if you're paying cash. Have that ready to submit with your offer. Know your market. Make sure that you understand the values in the market and how quickly homes are selling. If you find a home that you like and it's priced with, if it's priced with what other homes have been selling for, you're going to have to make a strong offer on it. We're not really in an environment right now where buyers can negotiate a whole lot if a home is priced right. So just understand that, make a strong offer if you find a house that you like. So that's pretty much it. Anyway, the market's still strong, the inventory is low, homes are selling quickly, and I expect things to stay relatively the same. Again, by the end of the year, I think we could start to see a slowdown, but I don't really think it's going to be anything major. I think it's going to be kind of like what we're used to with just, when the fall and winter come here, the market slows down. So I would expect to see that. So, but that's it. I hope you guys enjoyed the market report, and I will be talking to you guys again in about 3 months when we're going to be talking about the third quarter market report. Of course, if you guys ever have any questions between now and then, feel free to email me at nahum1171@yahoo.com, or you can reach out to me on Facebook at Bobby Nahum Real Estate on Facebook, or you can give me a call or text is fine too. So anyway, I hope you guys enjoyed this, and I hope you guys have a great week, and I will talk to you soon. Thanks.